Hello everyone, welcome to Smart Investing. This is the time for the weekly market update. So we're gonna review what has happened with the earnings, what happened with economic data, what has been the key headlines, what has been the performance on the key stocks of the market that we are covering, what has been the performance of the key indices, what has been the key headlines, and what actually were the strong stories of the market during this week. So stay tuned. Please subscribe, like, and make a comment to support this channel. Let's go straight into it. Last week was a real roller coaster, starting with optimism from strong earnings and GDP data, but ending in turmoil thanks to new tariff, a weak job report, and Fed uncertainty. The major indices hit records early on, but plunged by week's ends, with losses exceeding 2% across the board amid heightened recession fear. Let's break it down. First of all, the key earning highlights. Big tech and other heavyweight dominated with four Magnificent Seven names reporting earnings this week: Microsoft, Meta, Amazon, and Apple. Results show robust growth, but were overshadowed by tariff concern and rising costs, leading to volatile stock move. Let's look first at Microsoft. They reported earnings on the 30th of July. Q4 revenue top estimate at $68.2 billion, up 16% year over year, with earnings per share beating at $3.05. Azure Cloud surged 31% on AI demands, but shares dipped 2% post-earning on forward guidance worry amid trade tensions. Meta reported on the 31st of July. Q2 sales hit $41.3 billion, up 24% year over year, above forecast. Earnings per share were at $5.45. Business boomed with AI tool, sending the stock up 8%, even up to 11% the next day despite the capex. Amazon reported on the 1st of August. Q2 revenue reached $152.4 billion, up 11% year over year. EPS at $1.32. AWS grew by 20%, but softer Q3 outlook and tariff impact tanked the stock nearly 10% on Friday. Apple also reported on the 1st of August. Q3 revenue was $88.1 billion, up 6% year over year. Earnings per share $1.45. Service set records. iPhone held steady and share rose 1.5% on resilience, but pair gain later. Other key reports this week were from Visa, Procter & Gamble, and McDonald's, and Pfizer and Uber were solid but couldn't stem the broader sell-off of the market. Data started strong this week, but saw at the end of the week Q2 GDP came in at 3% annualized, beating expectation and signaling resilience of the US economy. PCE inflation eased, and consumer confidence held up midweek. The bombshell was Friday July job report, with just 73,000 non-farm payroll added, just below the 150,000 expected, with unemployment rising to 4.5% and prior months were revised down sharply, amplifying the slowdown fear and recession fear. There were a huge mess on the headlines, and Donald Trump fired the head of the BLS, and there were a lot of suspicion of data manipulation in the past. So actually that really gave a big spook to the market, and the market retreated on Friday quite significantly, and on Thursday as well. The big headline stories on the market front this week opened positively as US and EU trade deal eased some concern and worries for the trading between these two major partners, pushing indices to high. But Friday tariff deadline hit hard as well. New levies on major trading partners sparked global sell-off and trade war jitters, compounding the weak job data. For example, Switzerland saw the tariff increase to 39% after a failed trade deal between the two nations. Market rotated out of tech into defensive briefly, but risk-off dominated by the close of the market. The Fed, the July 30 FOMC meeting kept rate at 4.25–4.50%, making the fifth hold amid mixed data. Powell stressed the data dependency with no firm cut signal despite softening labor markets, leaving September odds at 50-50 and adding to volatility. But we saw on the market that there were a lot of people saying if the Fed knew about the significantly revised down job data, maybe they have cut the rate already in July or even before July. So definitely there are more and more people thinking that the Fed should reduce rate instead of wait and see. Key indices performance for this week: early gain wipeouts by Friday rods, weekly change on the 28th to the 1st of August closes. So IWM lost 4%, slammed by tariff and job miss. Small cap were the most vulnerable because, of course, the small cap was waiting for a rate cut or a sign that the rate would be cut. And obviously, they were also hit by the very bad job report data miss and slammed by tariff also increase. QQQ minus 2.2%, tech earning boost faded fast. SPY minus 2.4%, down 1.6% on Friday, worst week in a month. Max 7 minus 4.8%, Max 7 mixed tariff hit supply chain despite extremely good earning this week for the Max 7 we reported this week. TLT is 20 years Treasury bond ETF plus 1.2%, yield drop on risk aversion and cut bet. Basically, that's it for the week highlights. I hope that you have enjoyed this week highlight. I'm not going to make it too long, so please like, subscribe, and leave a comment to grow this channel community. And I'm going to release specific video on earnings of Amazon, basically touching on why the stock collapsed by 8 to 9% despite extremely good earning reports. Why, for example, Apple didn't move so much despite also very good earning report. And what are the key challenges with Apple going forward? I want also to touch on a separate video the earnings of Meta. Meta has once again smashed all expectation, and I want to show you why I think Meta is continuing to be a very strong contender in the Max 7 stocks. And finally, I want to touch on Microsoft earnings on a separate video, and why Microsoft also is one of the top contenders in Max 7, and Microsoft is going to grow to probably $4 trillion very, very soon. So once again, thanks so much for watching. See you next time.